All right, so welcome to another video. And in today's episode, what we're going to do is we're going to take a look at the CAVA IPO. It's set to go public. And the big question is do we hype? Is it big time hype, or do we dump the stock and not even bother trading this company? So as we look into IPOs, I always get a lot of questions on IPO days, especially for the bigger companies or things that make a lot of news headlines. Should I buy it? Is it the right time to get in? Because really, when you go into an IPO, you're getting an initial public offering, right? I mean, there's other investors that have got in before that, but now you're getting a chance to get in as a regular person to buy into the company where it could actually rise to some high prices, similar to if we go ahead and take a look at more like Chipotle here and CMG. You can see how that stock has really projected incredibly over from 2006 to the current price, towards the beginning of 2006. So if you go ahead and get into that IPO right now, you might think that, hey, this is the right time to buy. And I want to share with you a few concepts about IPOs in the fact that they actually really suck in most cases. Not always, but in many cases, getting into the IPO actually sucks. And the reality is that yes, you do get an opportunity to get in at lower prices, but there's a lot of noise and clutter. The bid-ask spreads are all over the place. It's messy, it's nasty. It just doesn't trade very cleanly. That's kind of the first part. The second part is when you look at IPO, remember what's happening is there's a lot of news that's going on. So boom, boom, boom. When you look at the news, there's a ton of things happening. So it's feeding your brain. And what's happening is you're getting really attracted to this IPO of something that's coming out. And you think you need to be the first one. Like, hey, iPhone 8, iPhone 9, iPhone 10, whatever, iPhone 14, iPhone 25. All these things that are coming out is saying, hey, go ahead and get me now. And the reality is that most of them don't pan out and do as well as you think. It's just really, when it comes down to it, it's just really a way to kind of gossip, talk about what's happening, who's dating who. And that's what the news is doing for you. It's feeding your brain and mind into this concept, and you feel like you're missing out. So you have to put that judgment aside. And really, if an IPO, if it's really a good IPO, a recent IPO is going to be the next big one, then what I would say is you didn't miss out, even if you go ahead and get into it a month or two later. Just take a look at something like CMG. Even if you got into this, let's say, hey, the IPO was in 2006, and then there it was in 2007. Look at what it really actually did. Nothing, nada, not much relative to the overall performance. So you don't have to rush to get it the first week, okay? The bigger thing you want to pay attention to is company growth over the next few cycles. And then if it really is a good company, you can go ahead and get into it months, even a year or two later. Just take a look at Tesla here, another big one. This stock for 1, 2, almost 3 years did nothing, nada, zip. Really nothing compared to the recent movement, right? And that's what happens. But the big issue and problem that you have to watch out for the IPOs is the problems you get with companies like a GoPro IPO, where they get overhyped and then boom, 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 it just continues to go down and so on. And then now you're in the gutter of around $4, but you were in the hundreds. So the people that got into GoPro are still stuck in it if you bought a lot of shares. Look at DoorDash here. Very similar concept. Let's go to the weekly here. Another recent IPO in around $200, trade sideways for a little while, and then just sold off. And now we're lucky to be in around a $72. Another one that we've got, Sana here, IPO. Okay, a lot of hype came in, and then a lot of sell-off. Okay, also a little kind of more back to where it was. Did you miss it? No. Let's go into Bumble. Dating. If you need a date, go ahead and check out Bumble, I guess. Same problem. $80 starting point, sold off. So when we start looking at these things and we think, hey, you know what, this is going to be kind of the next CMG or McDonald's or Papa John's. Yeah, I mean, of course it's possible, but the reality is IPOs, the hype that they are not always what they're cut out to be. It's just a lot of news that's feeding your brain to say and make you think, hey, I missed out on it, or am I going to miss out on it? Should I get in it now? Now, if you want to get exposure to feel that, to feed that little feel good senses, go ahead and just buy one share. buy one share. It'll be in your account, your portfolio, and you got the feel good senses to cater that. Okay. It's like a little short term, hey, fix for it. And that way you're not overexposed. And then it'll calm down your senses. And then after that, you can slowly keep it on your radar. Right now, it's more hyper focused in that account. And then you can look at it and watch and see, hey, how's it doing? How's it performing? Yeah, oh, okay, maybe I buy more shares, and trade the options and whatnot. So other than that, when you look at most IPOs, a lot of them are just really hype. They're not really going to do a lot for you at the beginning. What's really nice about them is that as they evolve and develop, they could continue to do quite well. And when we start looking at other companies here, like let's say CMG here, okay, what you want to pay attention to later on is the actual trading volume. Now, today, this stock's actually skyrocketing a little more, but the volume here is really only 40,000 shares. There's not much. It's a retail traded company, which makes it more difficult to get in and out. The bid-ask spread, also, when you look at the bid-ask spread, is actually not that good. 265, 270. That's a wide bid-ask spread. If you look at the options market as well, that options market is also quite nasty to get in, $43 versus $50. So that's a pretty wide bid-ask spread, which means you could get ripped off paying way more than you should for the option, or if you're doing spreads, again, it's much more difficult. So anyway, my point being is be patient on IPOs, be a little bit more cautious and careful, because when you go ahead and try and get into IPOs, you're really just playing, hey, did I miss out? Am I going to miss out? Kind of move. So be careful, be patient, and allow things to set up, and then you can get in it over the course of the next few months if you really want to, allowing your emotions to kind of calm down, making logical and rational decisions. Now, what are your thoughts on the IPO? Go ahead, write me a comment here, and just like other people have written comments, feel free to write a comment and let me know what your thoughts are on the IPO, how it's doing, what your thoughts are for investing in the future on other stocks and companies, and maybe we'll go ahead and reply back, post your comment on here on other videos, and so on. Anyways, thanks for joining me. Truly appreciate it, and I will see you in the next video. Take care.